A very good morning, friends. So I hope you're all safe and healthy. Well, in this particular month, I have been talking of various facets of Ind AS 7 that talks about cash flow statement. And I think when you look at the term cash flow statement, the word cash itself is quite indicative that a cash flow statement would be reflecting the inflows and the outflows as far as cash is concerned. But in a business situation, there could be a numerous number of transactions where there may not be a movement in terms of cash. Maybe the movement takes place at a later date, or maybe there may be no movements at all. So in this particular video, we're going to talk of a few examples what Ind AS 7 is given, where the transactions where there is no cash inflow or outflow are not reflected as a part of the cash flow statement, though of course a disclosure would be done as a part of the financial statements. Let's find out what does Ind AS 7 tell us in terms of non-cash transactions. तारीख नोट कर ली जाए 27th of March संडे 12 बजे. सर इस दिन क्या होने वाला है? भाई इस दिन होने वाला है सीए इंटरमीडिएट के लिए मेगा कॉम्पैक्ट कंपटीशन, जिसके अंदर आपको 40 क्वेश्चंस करने हैं 60 मिनट में लाइव टेस्ट, और आपको रियल टाइम बेसिस पर रैंक्स मिलेंगी और इन रैंक्स के बेसिस पर मिलेंगे खूब सारे इनाम. स्कॉलरशिप के फॉर्म में 1 करोड़ का स्कॉलरशिप पूल है, जिसके अंदर आप जीत सकते हैं एप्पल आईपैड, सैमसंग टैब्स, बोट की स्मार्ट वॉचेस और ढेरों अमेजॉन वाउचर्स. सिलेबस आपके सी इंटरमीडिएट का जो लेटेस्ट कोर्स इंस्टीट्यूट ने रिलीज किया है वो, और इसके अंदर जरूर पार्टिसिपेट कीजिए और जीतिए खूब सारे इनाम. तो भाई इंतजार किस बात का कर रहे हैं, तैयारी कीजिए एंड लेट्स क्रैक इट. टू कोट अनकोट para number 43 of Ind AS 7, it says investing and financing transactions that do not require the use of cash or cash equivalents shall be excluded from the statement of cash flows. Such transactions shall be disclosed elsewhere in the financial statements in a way that provide all the relevant information about these investing and financing activity. Now, a thing would come to your mind is that, why is para number 43 talking only in terms of investing or financing activities and not as far as operating activities are concerned? Well, I guess if you're applying, let's say, a direct method of cash flow statement, in those particular cases, you would be reflecting the cash receipts arising on account of collection from debtors. And you would be considering the payments which is made to the employees as well as the creditors of the company, which will give you the movement in terms of inflow outflow. And even when you're considering, let's say, an indirect method of cash flow statement, you would consider the net profits of the company and add back the depreciation, which is a non-cash expenditure, converting the net profits first into the operating profits and then converting that in terms of cash profits. So mainly the para number 43 is focusing in terms of the investing and the financing transactions where there has been no movement in terms of cash. There are a couple of examples also which are given in the standard which elaborates that what kind of non-cash transactions can you have. A few examples given in the standard itself are acquisition of assets either by assuming directly related liabilities or by means of a lease. Like for example, when you enter into a transaction of a lease, the entry done is ROU asset debit and to lease liability, not triggering any cash outflows at that point of time. Similarly, if let's say you acquire assets and the entire consideration is paid, let's say in the form of issue of equity shares, then there would be no movement in terms of cash. But let's say if there is a transaction where there is a partial movement in terms of cash and a partial movement in terms of non-cash movement, of course, the movement as far as the cash transaction is concerned, that would certainly be reflected in the cash flow statement. Other examples could be acquisition of an entity by means of equity issue. Like for example, in a business combination situation, the consideration which is paid to the shareholders of the acquiring company would be in terms of equity shares, but there is no cash movement and that would not get reflected in the cash flow statement. Or there could be a conversion of debt instruments to equity instruments, which again means that there is no cash flow movements. Well, this example is not supposed to be an exhaustive list of examples. There could be other examples as well, but these examples is purely illustrative in nature. The basic idea is to give the insight that a cash flow statement would reflect only those transactions where a movement in terms of cash has taken place, either an inflow or an outflow, as the case might be. That's all in this particular video. Thank you for watching, and wait for some more insights coming on cash flow statement in the other videos. Thank you, take care, and bye-bye.